Something really strange happened during Jensen Huang's keynote speech today. While he was live on stage, Nvidia's stock suddenly shot up toward $189. Then, just a few minutes later, it plummeted back down toward $181. There was no earnings release, no breaking news about the economy. It was just a speech. So, what exactly did Jensen Huang say that made the market react so violently? Let's slow this down and break down what actually happened. Jensen Huang was delivering the keynote at NVIDIA's GTC conference. This isn't just any event. It's NVIDIA's biggest showcase of the year. Think of it as the Super Bowl for AI infrastructure. At GTC, Nvidia usually reveals its latest and greatest innovations. New AI chips, new software platforms. Their roadmap for the future of AI computing and major partnerships with cloud companies and developers. Investors watch this keynote almost as closely as they watch an earnings call. That's because what Huang says gives us a crucial clue about how big the AI economy might become. His words can literally move markets, and today they certainly did. So what did he say that sent the stock soaring? During the speech, Huang painted an extremely bullish picture of the future. He described the AI computing opportunity as absolutely enormous and talked about the incredible scale of demand coming from global data centers. One of the key messages that got everyone excited was his prediction that AI infrastructure could become a $1 trillion market over the next few years. That's a staggering number. He also hammered home several other important points. NVIDIA's total dominance with its CUDA software ecosystem. The massive and growing demand for AI inference, which is what happens when you actually use an AI model. The strong adoption of their brand new Blackwell chip platform. And the fact that AI workloads are expanding across virtually every industry. In other words, the message was simple and powerful. AI demand is not slowing down. It's accelerating. For traders and automated algorithms listening to the speech in real time, that sounded like a massive buy signal. The buying pressure appeared almost instantly, and the stock jumped up toward $189. But then, just as quickly as it rose, the stock started to drop. Why? Because the market began to think more carefully about the other side of the story presented in the speech. Huang also discussed the massive infrastructure build-out that's required to support this AI revolution. This involves enormous spending by the hyperscalers companies like Microsoft, Amazon, and Google. Now, the bullish interpretation is obvious. More spending means more GPU demand for Nvidia, but there is another way to look at it. AI infrastructure is incredibly expensive. At some point, investors start to ask a critical question. Can these tech giants keep spending at this frantic pace forever? Or will they eventually slow down once they feel they've built enough capacity? On top of that, analysts are also keeping a close eye on another risk. Many of Nvidia's largest customers are busy building their own custom AI chips. Companies like Google with their TPUs, Amazon with Trainium and Inferentia, and Microsoft with its own internal silicon programs are all developing alternatives. So, when investors heard the extremely bullish long-term vision, their minds also started weighing the sustainability of that explosive growth. That's when the profit-taking began. People who bought in earlier decided to cash out, and the stock fell back toward $181. There's also a technical factor that made these price swings so sharp. Nvidia has one of the largest and most active options markets in the entire world. Right now, there is a huge amount of options activity concentrated around the $190 to $200 price levels. When a stock gets close to these major price points, where lots of call and put options are set to expire, it forces market makers to adjust their own positions to manage their risk. This process, called gamma hedging, can actually amplify price movements, making them much faster and more dramatic. So the wild ride we saw was likely a combination of three things. Genuinely bullish comments about the future of AI, investors quickly reassessing just how sustainable that future growth is, and the mechanical effects of options hedging around key psychological price levels. Together, these forces created that fast spike and the equally fast pullback we witnessed today. Now, here's the most important point for any investor watching this. Nothing fundamental about NVIDIA's business actually changed in those few minutes. The company didn't suddenly lose a major customer. Its technology didn't suddenly become obsolete. What changed was investor expectations. Nvidia today is one of the most watched and most anticipated stocks on the planet. Because of that, the market is constantly asking one single question. Is the future even bigger, even better than we already believe it to be? If the answer is a resounding yes, the stock jumps. But if the answer is simply it's still very good, the stock can actually pull back. That is the reality of owning a stock that is priced for phenomenal growth. The bar for good news is set incredibly high. The legendary investor Charlie Munger used to say something very simple about situations just like this. He said, "The big money is not in the buying or the selling. The big money is in the waiting." When you see investors reacting to every single sentence of a speech, they are trading on emotion and short-term noise. But successful long-term investors focus on something entirely different. They ask the real questions. Is the underlying business still getting better? Does the company still have a durable competitive advantage that protects it from rivals? And is the price I am paying today reasonable relative to the cash flow it's likely to generate in the future? Nvidia may very well remain a remarkable company for years to come. But even the most remarkable companies can experience extreme volatility when expectations get this high. Charlie would remind us, you don't have to swing at every pitch. Sometimes the smartest move is to simply watch, to deepen your understanding of the business, and to wait patiently for those moments when the market becomes either too optimistic or too pessimistic. Ultimately, today's wild move in Nvidia stock wasn't really about a speech. It was about the enormous weight of expectations. The AI revolution is absolutely real. The demand is real. But markets don't move on reality alone. They move on the difference between expectation and reality. Understanding that gap is where true investment wisdom lies. Thanks for watching, and if you found this breakdown helpful, be sure to follow for more.